Welcome to another episode of Your Voice Matters. Okay, welcome to another episode of Your Voice Matter. It is such an awesome day. Today we are going to be talking about one of the most important topic that we need to be talking about, and it's the least amount of time that we spend talking about it. It's going to be all about insurance. Who don't need insurance? Who don't need insurance? Everybody needs insurance. So today, I'm Viv Cunningham with Preferred Real Estate Brokers selling the American Dream here in Central Florida. So my girlfriend Beverly, I'm waiting for her to come on. But today I have my dear friend Milagro here today. So I am going to introduce today Milagro. And my husband is Spanish and he's from Panama, so he always telling me about rolling my letters and rolling this and said, "Oh, I can't do none of that. I'm just gonna say what I need to say." But anyway, I'm gonna introduce today Milagro Almarante. She was born and raised in DR, Dominican Republic. I have a girlfriend that was raised. I went to DR last year, and it was so awesome just to go there. And she was part. She's from there as well. And I had such a great time in the DR. But she's a Dominican Republic. She emigrated to New York in 1991 and relocated to Florida in 2001, where she lives currently. Milagro has a bachelor degree in education. She is certified in mentorship. Whoa, I love that. Coaching and leadership development with John Maxwell, the famous John Maxwell. That is so awesome. She has served for over 30 years for a variety of roles in missions, volunteer ministry, and religious services, as well as in education, in the education field. Milagros has traveled the world and enjoy learning about the different cultures. Milagros is a licensed financial professional working in the financial industry, serving all of the United States, all of the US, Puerto Rico, and Canada. She is dedicated to adding value to others and to educating the leading people to a better future, both financially and spiritually. Milagro, go ahead and introduce yourself, girl, and let's get right into it.
Thank you so much. I am so thrilled to be here and so grateful for this great invitation. Again, my name is Milagros Amarante, and I'm here to serve you. Viv has said everything about me. And again, I am your servant here in Central Florida, your financial professional with a great team helping you get the proper protection and not only protecting your life, your assets, your family, your future. I am here to serve you. Thank you, Viv.
You are welcome. You are welcome. So, Milagro, let's jump right in and talk about insurance. I had my mom was asking me about insurance, about different kinds of insurance for the house and stuff like that. And then that's when a great friend of mine, Junior, him and I has been doing business for so long. And I reached out to him and I says, "Hey, do you have anyone that does insurance? This is what my mom wants to do." And he says yes, and he sent me your contact information. It is so important. Okay, it is so important for a great referral. Okay, people don't know the value of referral. When somebody refer you something that you trust, you believe in. So I am so honored to meet you, and I'm so honored to be talking to you, and for such a short notice of jumping on the show. Thank you for coming on.
Absolutely. I'm thrilled to be here. And yes, let's talk about insurance. Who does not need life insurance? Who does not need insurance as a whole? Insurance in general it's basically a legally binding contract between you and the insurance company. But what does that mean? Life insurance primarily helps the household to continue to meet their financial needs should anything happens, right? And life insurance is not only for those that believe in life insurance. There's people that says, "Oh, I don't believe in life insurance." Well, if you are breathing, you need life insurance. That's what I always say. But also today we are focusing on the mortgage protection life insurance as well. So there's many forms of life insurance, and we can go to the next slide where I can tell you, let's say three forms of life insurance: whole life insurance, term life insurance, index universal life insurance. But again, for this show, we're going to focus today on our mortgage protection insurance, which is a policy designed to protect you and your loved ones um, from from the financial burden. If of paying off your mortgage, if anything happens, let's say the breadwinner left this earth, or got sick, because yes, you can also have mortgage protection insurance, which is a term life insurance basically with living benefits. And we can see that in the next slides. We can talk about
So,
the
Milagro, before you move on a little bit, okay, so okay, we are going to be talking about first. Let's talk a little bit about each of, touch on a little bit about each of them. Like, people are seeing it on the screen. They're seeing the term life, and they also seeing the index life. Touch a little bit about that before we move on to the next screen on each of those.
Absolutely, I can do that. So, whole life insurance and index universal life are in the category of permanent life insurance, meaning that you will start your coverage from, let's say, 15 days old until you are 121. So
Okay.
that's permanent life insurance. Anywhere in between, of course, there's a limit when you can actually start. I believe it's 85. Some companies, it all depends on the actual product. There's so many products in whole life and in index universal life, and it could vary in terms of when is the last age that you could acquire. But the first age, it can be 15 days old. So it can serve as a cash accumulation, building wealth, and also even tax-free retirement. So many people use the terms of permanent life insurance for accumulating wealth.
Okay, very good. Okay, thank you for answering that.
Absolutely. Term life insurance. So, how it works in the modern world is also the mortgage protection insurance. Before a couple of decades ago, some lenders will actually required for you to acquire mortgage protection insurance through them, basically. Nowadays, the modern mortgage protection life insurance is basically a term life insurance where you choose the beneficiary. It's not the lender, the beneficiary. So your beneficiaries can do what they need to do with the money at the moment that they need to use it. You can be your own beneficiary of your term life insurance when your term life insurance is with living benefits.
Hold
So
on.
not, yeah,
Stop there a minute. You said I can be the beneficiary of my own term. How does that work?
that works when the term life insurance that you acquire includes living benefits. So living benefits means that if
Mhm.
any chronic, critical, or terminal illness happen to you, you can actually claim from your life insurance to be able to cover the necessities while you are sick.
Okay. All
And
right.
in the
Okay.
next slides, we talk about that a little bit more. Basically, I just said it in terms of term life insurance is for a specific period of time. It could be 10, 15 years, 20 years, 25 years. It all depends. Many companies, they take it as they have for you the option to do it in increments of 5 years. However, you can choose from 10 to 30 and so on years. So at the end of that term, the insurance expire, or you could potentially extend it or renew after that, but it's going to be very costly. So a good thing about life insurance, term life insurance, is that it is more affordable many times. So people will take term life insurance instead of permanent, because term life insurance is less costly.
Okay, so with the term with the term life, I think you and I was running some scenarios the other day. If I think I used myself as an example. If I was 62 years old, it was that the insurance you were telling me about. If I was 62 years old, this is how much it would cost.
That is correct. That
Okay.
is correct. We were talking about term life insurance because specifically we were talking about covering your mortgage.
Mm-hmm.
So, yes, it is less costly. The reason also in terms of the cost for the term life insurance versus permanent life insurance is that part of the permanent life insurance will go to the savings, to the cash accumulation, to building wealth. So, part of what you pay will go to pay for the coverage, and the other part will go to the savings part of it.
Okay. All right.
And we can go to the next slide. When we talk about the right coverage, well, then you ask me, so what is the right coverage for me? Well, if we're talking about term life insurance, basically, and you want to cover the mortgage, then let's identify what is the mortgage amount that you want to cover. Now,
Mm-hmm.
we recommend that you take all your debts, you add your debts. Let's say mortgage is for 400,000, and you have other debts that all of it will be $1 million, including education. Then go ahead and get a coverage for it for $1 million. And
Mm-hmm.
show anything happen, you can use your life insurance for any of it. It doesn't have to be only for mortgage, because the good thing is that you choose the beneficiary. Your mortgage lender is not the beneficiary, so your family and you can do what you need to do with the right coverage. And then we another way to calculate how much money or coverage you will need is to multiply your income by 10. So let's say that you are $100,000 in income a year, then let's multiply that by 10. That is $1 million. So that could be a way to identify the right coverage. Now, there's other ways, and the best thing to do is to speak to a financial professional, meet with your financial professional, and there's many options and many ways to help you identify the right coverage.
Okay.
Then
Can
we,
I ask?
Mhm.
Can I
Yeah,
ask a question?
absolutely.
Okay. When you talk about that, the owner of the policy can be the beneficiary. That a little bit.
Absolutely. So there's term life insurance that they include a living benefit. Of course, if you qualify for it, everything in insurance you need to qualify. And if you have living benefits and something happens, let's say a critical, chronic, or terminal illness. Actually, I think that we have another slide with that. Um, critical terminal or chronic illness, you can actually use your life insurance and claim a part of your life insurance coverage to cover during the time of illness.
Yeah, I've heard
So
of that. My
when
broker had that. I remember signing up for that with my broker, and he did have that. It didn't cost me much when I signed up for it, but I ended up canceling it. But I remember having that. Yeah.
Yes, it
so
doesn't cost much. It's very small amount that
Right.
to add to it, but at the same time is so beneficial. I tell you, in my case, I have a personal um, a testimony. My husband went to work on February 9th of 2023. He's a building electrician. He was working as normal, 8:30 in the morning, next to a light pole, and a car came in and crushed him in the light pole. So my husband is alive, thank God, but it has been an extremely difficult period of time in our life. He is chronicle and he's critical. Thank God, he is out of the terminal stage. But if anything like that happens, you can actually claim your life insurance with living benefits. My husband
so
has not been able to go back to work after a year. So he's
so
still not only in the chronicle side of it, but also in the long term uh, care disability right now, which that's another part of life insurance. When you have permanent life insurance, you can actually add not only critical and terminal illness and chronicle, but you can also add long term care.
Mm-hmm.
And on another slide, I talk about a little bit about that too. The previous slide, Beef,
I
if you
think Beverly had some question before we move back. Beverly, go ahead, Beverly.
yeah,
Beverly.
I'm saying is, could you explain further? If when you're purchasing the term life insurance, don't you designate a beneficiary?
yes,
And so the use of the insurance for paying for your critical expenses, would you have to buy a rider for that? Or that's basically a part of the insurance without a rider?
there's products that the rider is included already.
Or
So
this rider is included?
it's included. So it all
Okay.
depends on the product that you are getting. You
Mhm.
can get term life insurance without living benefits, or term life insurance with living benefit.
Yeah, but you name your beneficiary just the same as any other insurance.
Just the same as any other insurance.
You would
The
name
only
your beneficiary.
The only difference is that if there's an event of critical or chronic terminal illness, you as the owner, you can actually claim your life insurance. You don't have to
About
pass away.
80%, about 80% of the
It
proceeds.
all depends on the product. There's a variety of products in companies. So I'm a broker and I can search for different companies for you, and it all depends on what the company is offering at the time, and all depends also on the actual critical or chronic terminal illness type.
Okay.
All
Yeah,
right. Next,
absolutely.
is this a slide you wanted me to go back to?
Next.
This one or the
Uh,
other way?
the other
That one.
way, right there. So I
Okay.
wanted to bring this up. So right now, according to statistics, there's over 14 million widows in United States. There's an alarming percentage of these widows filing bankruptcy. Why is that so important to bring it up? Because the number one reason they filed bankruptcy is because the breadwinner or the other person that brought more than half of income to the house did not have any protection, didn't protect their family, didn't protect for them to be able to pay their mortgage or be able to pay their everyday necessities. There's alarming, not only in terms of bankruptcy, but alarming number of those widows that also are in need within couple of months of the tragedy.
Yeah, so that's why I it kind of came to, my mind, with my brother and my mom, living, underneath the same roof, and I don't know who's going to pass first. Only God knows. That's why we were trying to sort out something like that to see which is the best thing, where is the best way to go, you know,
That
kind of
is,
thing.
that's
So,
correct. We can continue.
okay, next slide.
Yes.
Okay.
And we already talked about living benefits. And there's other statistics that I want to share next, which is 1 in 2 men and 1 in 3 women will contract some form of a cancer. Those are statistics. I didn't make this up.
Mm-hmm.
There's over 800 strokes victims every single year. Talking about living benefits, huh?
Mm-hmm.
Every 44 seconds, someone in the United States has a heart attack.
Mm-hmm. Mm-hmm. Yeah.
Okay. And
Mm-hmm.
when I talk about long-term care, approximately 70% of people over age 65 will require long-term care assistance during their
Mm-hmm.
lifetime. And over 40% will need care in nursing home. And let me tell you this, the experience that we had in the hospital with my husband, 1 month, one entire month in the hospital, we saw the young, the
Mm-hmm.
younger, the older, everyone there, in different ages, that either had a tragic accident, catastrophe, um, anything that could lead to long-term assistance, which that's what happened to my husband.
Yeah.
So we never know when anything can happen. We need to be protected. If we are breathing, we need the protection. And
Yeah.
we can the next one.
Hoping that when you need the insurance, you pay for the insurance. It's there to protect you, because you pay insurance sometimes, and when it's time for you to do something or claim something, they don't want to pay.
Well, there's a saying that we don't know. We don't take insurance when we really need it. We
Mm-hmm.
want to take it when we cannot have it.
Mm-hmm.
So because 1 minute can be too late.
Yeah.
For example, going back to my own personal experience with my husband was at that light pole for only 1 minute.
Mm-hmm.
1 minute. 1 minute could make a big difference. We never know. And I wanted to bring this up as well in terms of group term insurance. So many people tell me, but Milagros, I have insurance through my job. Well, number one, your job will not give you enough,
Mm-hmm.
because regularly your job will offer 2 or 3 years of your, or maybe 1 year of your salary in insurance. That's number one, which is not enough for you to pay even the mortgage, or for your family to protect themselves, and to be able to cover their necessities for a couple of years. Number two, according to statistics, you change your jobs very often. Like it says here, 13% of millennials and 41% of baby boomers believe workers should stay in a job for at least 5 years before looking for a new role, meaning that they are moving. and different roles in different companies. So you never know if you can, number one, become insurable,
Mm-hmm.
uninsurable, uninsurable, while you are jumping from one job to the other. And when you leave your job, you are unprotected. You have nothing.
Right.
That is a very short term life insurance. So the group life insurance is not enough. Please, please, please make sure that you have your own protection, your own insurance, either permanent for as long as you can. 30 years is really a good choice. But of course, you can go with your budget as well. I have clients that they choose, let me just take 10 years for now, and then they can actually convert it into a permanent life insurance later. Um, but by
So, Milagro, for that insurance that you have at your job, can um, you take it with you and make it becomes it's just a job insurance?
It's just a job insurance. There could be some companies that they say you can take it with you, but it's gonna be extremely expensive,
Mm-hmm.
probably to take it with you. So majority of people they want.
Okay.
So it is only a group insurance, and it's only with the employer. Actually, you are not the owner of your insurance. In the group life insurance,
Mm-hmm.
the owner is the company. You have only a certificate that you are part of that group. If anything, if you die, then your family member would be the beneficiary. But again,
Beneficiary.
it's a very small amount. It's not enough.
Okay.
Mhm. And we
Next
can
slide.
go to the next one. Absolutely. So, mortgage protection insurance. Let's go back to the mortgage world, right? Um,
Mm-hmm.
so, mortgage protection insurance protects the family as it creates financial security. It gives you peace of mind. It keeps your family in their home so anything happens. And again, if you have living benefits and something happens, you can pay your mortgage while you are in bed. Ensuring generations to come that they are set up for financial success, because life insurance is not only for you and for the immediate, but it's for those that you love and love the most, those that will continue your legacy. So there's a saying, do you want to leave a liability or do you want to leave a legacy? And that's when life insurance comes to either a legacy or a liability. You choose.
Now, but with the mortgage protection insurance, for somebody that's in their 70s or 80s, it's so expensive, Milagro.
It is very expensive. That is correct. That's why also we are so passionate about passing the word and also encouraging anyone and everyone to get the protection, the proper protection as early as possible,
Possible.
even
Oh,
15 days old.
now, okay. Now, so when you get it as early as possible, now let's say you reach, okay, so let's say you get it and it can last 30 years, right? Okay,
Correct.
so let's say you get it and as early as possible. Let's say you got it in your 40s or your 30s. 40, let's say 30, 40, 50, 60. Okay, so now when that 30 years is up, you got to renew it again. Okay, now it becomes more expensive.
It is. It's very expensive if you are planning to renew it. However, one of the part of the financial education that we provide is to actually identify when you can start your permanent life insurance, because it lasts forever, number one. Number two, it gives you the opportunity of cash accumulation. Basically, some of them will give you a rate, a return of premium, basically, or even outpace much more than that, and also outpace inflation, and is tax free, your cash accumulation. So we encourage families to, if you cannot afford a permanent life insurance now, at least to start with a term, and then later on, when you can afford to start saving within your life insurance, then to actually acquire a permanent life insurance. Now, I tell you this, for example, for a term life insurance, a young family, they are 30 years old, they just bought their new house, the home is 30 years mortgage, correct?
Yes.
So they take 30 years of term life insurance to protect the mortgage. Let's say the mortgage is 500,000. Is very, very inexpensive for a 30 years old. For example, I have a 27 years old that he pays only about $27 for his policy.
Mm-hmm.
Imagine 30 years. Okay, so it all depends on the actual goal. So if my goal is to protect my family, not to lose the home, and also to have enough for them to support themselves if I'm gone, or if anything happens to me while I'm alive, then we take a 30 years, which is, the length of the mortgage. And also my child, let's say that a family in within the 30s, they have a child, so the child will be an adult already when the policy expires.
Mm-hmm. Okay.
Okay, those are
Next slide.
strategies, and I am very passionate about helping families to find the best strategy and the
Mm-hmm.
best solution. uh, many of them, they take both permanent and and term life insurance, because when the term life insurance expire, they are already ahead of the game with the permanent life insurance.
Right, right, right. So just move it, just right, slide right into the other.
Correct, that's
So
correct.
yeah, everything nowadays, especially insurance, and I have the passion just like you have of getting people, you making sure that they have the right insurance, and then I make sure that they find the right house and to put a roof over their head, because there's, they need a roof over their head. People need a roof,
Correct.
so you gotta
And,
have
and
that.
that is right. And I believe, Viv, that if you can pay mortgage, part of your, and let's say not your expensive, but your investment should be the protection. Because at the end of the day, it's not an expense, it's a savings. Of course,
Mm-hmm.
if it's term, it's a savings that can last only 30 years, right? If it's a permanent, then that's another, that's different. However, it should be part of your mortgage, let's say,
Mm-hmm.
to to put that little bit of money aside for the protection of that mortgage.
Yeah, I teach the home buyers class. So what I'll do is, a lot of these people that get a home, they're young. So I tell them, just like I would say, get a home warranty. Don't forget to get your mortgage protection insurance. Just in case something happens to you or your family, that it protects your hard earned,
Correct.
spent money that you spent to purchase a home, and not want to lose it, and make sure your family is covered. Yeah.
That is right. Well, then we are here. We are a really great team of brokers that can help you here, not only with insurance, but also retirement strategies, business strategies, and anything that comes in terms of financial education. We are in the 4248 Town Center Boulevard, right in the heart of Hunters Creek, in Orlando, in Suite 6. So we are here to serve you. And if any question, anything, we are here. We love to hear from you, and we are here to serve you.
That is awesome. Beverly,
Eh,
are you there? You have any
Yes,
question,
I'm
Beverly?
here.
Go ahead.
So, does the mortgage insurance covers unemployment?
Uh, what you mean unemployment? Someone
You
that
lose your job and you're not able to pay your mortgage.
only if the cause of losing the job is because you had a terminal, critical, or chronic illness.
Okay.
It needs to be
So
related
it
to.
covers illness then,
Right. So it's not just you losing your job and then
cause you not to be
right,
employed.
right,
That's
right. So
correct.
Okay.
you gotta be sick. Yeah, right. Yeah, I remember when I got it at Jose's office and it was like $27 or something like that. I was paying for it. You know,
Yes, very,
that was
very
about,
inexpensive.
that was about 7, 8 years ago.
So I have another question regarding the the universal life insurance. Up to what age can you purchase the universal life insurance, or basically any whole life insurance other than the what death benefit insurance?
So for that, we need to look at different companies and different products. So in terms of whole life and index universal life, there's several different products that we can search. It all depends on the company and what they can offer. Some of them they cap it to 75 years old, and others they cap it to 85. So it all depends on that. I can look for you, Beverly, and can find the right solution for that, for the specific age that you could look for.
But say 75 and 85, wouldn't that be termed as a burial insurance?
It could. So
Because that would probably cost you more than, if it's the regular insurance, that would probably cost you more than what it would cost to bury you.
we would need to look at the different products. Yes, it could. That's another type of permanent life insurance. The final expense life insurance is not other than a permanent life insurance until you pass. So, yes, that's a type of life insurance as well. It all depends on your budget, your goals, what you actually want to accomplish, and of course, it has a lot to do with the age and the health of the person.
Yes. Okay.
Are you good with your question, Bev?
Yes, I'm fine. I'm fine.
All right, so there you have it. There you have it. It's been a great chat about insurance. There's just so many different kind of insurance that you actually need. It's like mind blowing. That's why you have to get with your service provider. You got to get with your insurance company. There are just so many different things out there that we really don't know about. I usually try to stay in my lane. My lane is real estate, and I want to make sure that I have enough knowledge of everything that the person need in order to protect them when they purchase this great piece of property, and that they might own for 30 years. I want to make sure that I'm protecting them, whether it's telling them that, hey, while you're young. Okay, because when you're young, I remember doing some research online, and I remember there was somebody that was, I think, 18 or 20, and when I looked online, it says $14, or if not, it says $27. Compared to when I was asking you a question about how much it would cost me, it was like 300 or something dollars. It's like I can't afford that. And then with my mom, when we talked about it, we looked at it, it was like 700 or something dollars. It's not really worth it to her. But that goes back to say my brother is younger. So would it be that it might be better if he takes out the insurance?
Absolutely. The younger, the better. And yes, if he doesn't have it, most likely that's the best way.
Okay.
But
And
he
go
couldn't
ahead.
take it out for your mom though. You have to take it for himself so it wouldn't benefit your mom.
What do you mean?
If your brother take out the insurance from himself and your mom dies, it's not going to benefit him at that point because your mom dies and she is not insured. He is
Mhm.
insured.
Right. He's insured.
Yes, but your mom is still not insured.
Right. So, but just
So
in
it
case
would not benefit
so,
your mom. It would not benefit him as per your mom.
okay. So regardless, if he would just benefit him, so he wouldn't need to take it out.
Yes, or is beneficiaries when he died,
Okay. So
or if
then it
he
don't make.
got terminally ill.
Right. Right. Okay. All right. Makes
Anyone
sense.
that breathe, anyone that breathe, and anyone that owns a home should have life insurance.
Anyone
Yes.
that breeds and anyone that owns a home. So it doesn't really matter. So you can still take it out and leave the money. If anything happens to him, he can still take it out and leave the money to his beneficiary, like my
Correct.
grandkids.
Mm.
Yeah.
I got I got plenty of them. I got like six of them.
But when you get older than 50, it's very difficult for you to get
And then
insurance.
and then you have to be in good health too, right, Malagra?
Exactly. And you
Right?
don't smoke or you don't drink excessively. So it's very difficult. So as she said, it's best to purchase your insurance young, preferably in your 20s.
Well, when you're not when
Yeah,
you're that age, Malagra, you're not even thinking about life insurance and stuff like that. So
you
most
just,
people usually don't.
yeah,
Because
you just,
when you're in your twenties, you think you're in inevitable, and you're gonna live forever, and you're not thinking that
mm,
you're gonna die. So therefore, it's just when you get older, you realize that you're closer to death than you are to life. I talked to a guy, and he said there's more runway behind you than there is in front of you. So you're not
exactly.
really thinking
Yes.
about
Now, let me talk a little bit about that in terms of being qualifying for it. It all depends on the illnesses, and yes, it all depends on the health. But at the same time, there's so many options in many companies, and some companies they are more lenient than others that give you options even for smokers, even for I have seen even people with diabetes taking and getting approved. So it all depends again on the terms, the conditions, and yes, it could be a little bit more expensive for one that has some kind of illness than the other. But again, the best way is to sit down with your financial professional and look at all the options. Don't leave
that.
anything on the table. Just look up for all the options, and don't assume that you will not be approved, or yet that you will not qualify. Either if you smoke, if you don't, if you have some kind of if you take any kind of medication, just speak with your financial professional, and you may be able to find a solution.
And that it's the same thing
Yeah,
when I
but
teach the home buyers class as well. I tell people, I said, don't eliminate yourself. Go and sit down and talk to the lender and see what the lender can do. Because you'd be quite surprised to know, because they're in it and they can guide you in the right direction of what to do. So don't eliminate yourself.
Correct.
and
But
two, when you smoke or have diabetes, if you're taking pills, most companies will look at your file after they look at your health record. But if you're taking insulin, that's another story. 10 chances to 1, you will get it at a high premium, and the effective date won't be like 2 years down the road. That means if you die between that 2 years, they give you back your premium. You're not going to get the the
Who they give the premium back to if you
your
die?
beneficiary, because
Okay.
you're gone.
Okay.
So they give it to your beneficiary, but they're not going to give you the policy, the amount
Mhm.
of the policy. They're only going to give you back the premium.
Yeah. Well, sounds like all kinds of insurance, right? It's
Mhm.
the same thing with
All
house.
Most
kinds.
insurance do that when you have like diabetes or you smoke. Smoking is not like you do one a day or so. It's like you take one light one,
Yeah.
so that is
Yeah, so you got to just look at it and see, and everyone is evaluated different. No two-person is going to be the same. It's just like with buying a house. No
exactly
two-person is going to be
exactly
the same. So just like Milagro is saying, you sit down in front of your financial advisor. He's going to ask you all these questions because he's going to have you fill out all these questions, and then after that, then he might say your insurance is $1,000 a month. As simple
but
as that. Or he might sit down and he might say it's $27 a month, depending on your age. So
but
that all
most
just depends on.
insurance do not look at smoking and diabetes, or if you have a heart attack, they don't look at it favorably.
Oh, well, I mean, who would? It's just like, I mean, I go back to say it's just like having a house and it was flooded.
Mm.
The insurance company is going to charge you more because your house it was flooded before. And they're gonna raise your insurance. So that's why it's insurance, and that's why each situation. I said each situation is different, and everybody when they sit down, they're gonna look at everything differently. It's the same thing.
Oh yes.
Yeah, it's the same thing. So yeah, it's
Yeah.
not nothing is cast in stone, and no two insurance is the same. Because even when you're twins, everything is you're different. No matter
Mm.
no matter what, when you're twins, everything is different. So it's for you to sit down and evaluate it,
Yeah.
and choose the right insurance for you. Choose the right insurance
Mhm.
that's for you to protect your family. That's all it boils down to. And Milagro, Beverly, you have any more questions?
No, 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 I'm good.
Milagro, I so thank you for all
You're
of that, explaining all of that. And I appreciate you coming on in such a short notice. And this is a wealth of information. I will make sure that, I share it out there to people and give it to people. And of course, referral goes back and forth. If you know somebody that's looking to purchase a home, hey, we're here. Beverly and I are here. And same thing with you. We know somebody's looking to purchase, the kind of insurance that you have. Hey, that's what it's all about, referring back and forth and communicating. And I'm glad that you can contact me, you friend me on Facebook, so I can kind of I don't have to worry about searching for your information or losing it. I'll have you there. So any last word you want to say, Milagro, before we sign off?
I am so grateful for the opportunity to share this information with you guys. And there's so much more that we can talk about. Reach out. We are here to serve you. We are a very large team and very effective team to look for what's best for you. So thank you so much again for having me on this wonderful platform.
And you're welcome. And there you have it. Thank you guys for watching so much. Thank you for listening. See you on the next episode of Your Voice Matters.